Hey guys, so today was Jackson Hole. We honestly didn't get anything too surprising. So as you can see with this candle here, we did have a little bit of a sell-off. It really wasn't initially on the speech. It was more towards basically when he stopped talking. We started to sell off, but pretty much what ended up happening was markets kind of realized that we didn't get any new information. Jay Powell just basically stuck to the same script that, we're going to be data dependent, we're going to do this, we're going to do that. He didn't really give any concrete answers or direction on what's going to happen next meeting. But I'm a little surprised still just because markets are still pricing in a pause next meeting, and that really didn't change today. But if you look at inflation expectations, we're looking at about a 0.5% increase on year over year CPI next month and about a 0.6% month over month increase. So, and that'll be right before FOMC happens the week before. That's a pretty large increase to not warrant a 25 basis point hike. So I'll be interested to see how that plays out in the market. So taking a look at the daily here, we actually put in a new demand at 436.7. So we now have a double demand from basically at the 436 mark. And now we have our resistance that we're going to target right here at 443.1, which is also the daily 20 EMA. We were not quite able to get back over the 8 or 50 EMA though, but you can see we have this nice diamond pattern forming here. This is one of my favorite patterns. It generally leads to a big move one way or the other. You could zoom out and actually see this more of a bear flag and could expect some downside and for this downward channel to continue. But we definitely got to take the possibility that this becomes a nice cup and handle and we go back up into the 450 area. We're coming into a new month starting end of next week, which will be September. We're likely to see a little bit of volatility and changes with that. I mean, you got to think about what's happening in September. We have FOMC meeting and we have a CPI, which is set to basically confirm that we're at the trough of CPI now. Next week, we're also going to get JOLTS and jobless claims again. We're also going to get unemployment rate and some ADP and GDP. So a lot of data next week that could definitely move this market. From a weekly standpoint, we're kind of just stuck. After we broke this bull channel right here, realistically, we're just basically stuck between the weekly 20 EMA and the 8 EMA. For me here, I would not take any sort of long until we closed over the 8 EMA, which is 442.2. Really, you could be on the air of the safe side at 444.8. And I really wouldn't short this until we close under the weekly 20 EMA. You can see we are in a downtrend, but this could be one of those 1, 2, 3 moves that are going to work out here too. Going over to futures here, same thing. We have our nice little diamond pattern. We did get a new demand and we did bounce off of the weekly 100 or daily 100 EMA again. So basically this 43.74 to 43.84, this 10-point range right here, this is now major support. In my opinion, it's going to take a lot of selling and some momentum to get us under that. And realistically, looking at these two wicks right here, we probably just need to close below the weekly 100 EMA in order to have any sort of downside here. However, you can see since August 15th, we have been basically holding in about a 100-point range here from 44.76 to really down to that 43.74 area. Looking at the weekly here, same thing. No new demands this week on the weekly. We are oversold on SPY and futures and the Qs on the weekly. So I do expect some upside relief. However, as you can see, we did reject the breakout and we did backtest this 44.54 and 44.83 supply levels and we did reject them. So at this point, same thing. We either need to close under 43.61 or we need really a close minimally over 44.57, but preferably over 44.84 in order to have any sort of solid sense of direction. Outside of that, we're pretty much just sitting in a chop zone right now. And really next week, outside of the data, I feel like anybody has a potential to take us either up or down. Going over to the Qs, Qs have a little bit of a different setup. We did not get a new demand today, but we did, as you see, bounce pretty much to the penny off of our 358.42 demand area here. We bounced right off of that area with a big old wick. So that was the low from right here on August 17th. So on the Qs here, you can see pretty clearly we're pretty much riding this 358.4 to really 369 range since August 15th, but you can even go higher to 372.7, and since really August 8th, this has been our range right here. So the expectation is that we continue to range. Same thing here, we're going to need to be under 358.5 to convincingly see any sort of downside. And again, most likely need to really close over 372.8 to really convince me that we're going to see any sort of sustained upside movement. Going over the weekly time frame here, it's the same thing. We were not able to get over the 365.9 weekly 8 EMA, but we couldn't even get down to the weekly 20 EMA support at 352.8. So same thing here. Ideally, we want to see a closure over 369.6 on the weekly time frame, or under minimally 353 on the weekly to see a downside potential for the week after that. Going over to the VIX here, so you can see, and there's kind of a better channel that I'm going to watch here that I'm going to show you guys right here, and that goes from our two major points. So if you look at it here, and I didn't update my demand, so I'll go, or our supply here, so I'll go ahead and do that right now. So as you can see, basically since June 2nd, we have been in a consolidation period that led to a breakout. Now, there is obviously some upside that is happening here, but as you see, we're kind of getting bursts of energy coming back down, finding support, burst of energy, finding support. Are we going to see another burst up, or are we going to go back down? So on the VIX here, you can see this, and I've talked about this before, this 17.1 area was a major pivot point, a major resistance area, basically since June. So this week we were able to get over it, and that was early last week too, over it. But now we actually reconfirmed that 17.2 is a new supply and resistance. So when you look at our chart here, basically 17.2 to 17.9 is our major rejection area. And then we go down here and we have basically this 14 area as our major support. We did get below our demand that we put in yesterday at 15.97. So really we're going to be looking for a move back down into this 14, maybe high 15 area, or sorry, low 15 area here. The VIX doesn't really give us a ton of guidance or really direction about where we could be going next week. Obviously, we really didn't even close a new lower low. But what you see is that we did make a high and then we didn't quite close below it. If we would have seen this close below this candle, I would favor a good amount of downside, but this kind of, almost favors that we're going to see a bounce back up on the VIX next week. So I'll be watching closely to see how that plays out, but I'm pretty neutral going into next week. I don't really have very many expectations, as I really believe that, bulls could take this. I think bulls could easily take this back to 450 next week. Maybe not 450, but at least 445 to 450. But I really also wouldn't be surprised to see the bears get us back down somewhere close to almost 430 next week. Really, either of them, as long as one of them comes out, with some strong volume and momentum, I would not be surprised to see one or the other take over next week. So I hope you guys had a good trading week and a good day today, and I will see you guys next week.